Hello and welcome. You have tuned into Buy Now, Sell Now and ET Now. I'm Shrishti Sharma and with me Cheryl D'Souza. And viewers, this is the show where you get answers for all your stock-related queries. In a short while from now, we will connect with our experts. And don't forget that today is Friday and we're going to be getting you Buy Now, Sell Now Pathshala. But before that, let's have a look at what the markets are up to. So Cheryl, just ahead of the long weekend, feels like that the markets are also in that rejoice mood, and what's so happening market, we are moving in the gains today.
Absolutely. A very good morning to you, Shrishti. I don't know about the markets actually being very happy that it's Friday and we are heading towards a long weekend. You surely are sounding pretty much perked up in today actually. Look at the sound coming in. I thought you were unwell, weren't you?
Yes, I was, but I guess that because I now foresee that there's a long weekend, I'm trying to recover.
So she's trying to keep all her energy, making sure makes the best use of the long weekend. But let's take a look at the markets, what they're doing at this point in time. Positive start coming in for the benchmark indices. Yes, SGX Nifty, or rather GIFT Nifty, did indicate that we will be in for a flat to positive start, and that's how it has actually transpired. In fact, we are building on gains, 0.3% uptick coming in for the Nifty as we speak. However, we are still below the 19,600 mark when it comes to the benchmark indices. Let's take a look at what Nifty Bank is doing, because that one is marginally outperforming the benchmark indices in today's trading session. 0.5% uptick coming in for Nifty Bank as we speak. Remember, we started a brand new series as well. Talking about the list of gainers, then you have NTPC that is perked up in trade today. 4% uptick coming in for NTPC. Remember, you have an HSBC note that's coming on the power sector. On back of that, you can see NTPC actually buzzing in trade. Apart from that, you have Dr. Reddy's, Hindalco, Cipla, as well as Sun Pharma that's holding on to good gains in today's trading session. While on the flip side is the IT index that is subdued in today's trading session. It was expected that the IT index and IT counters would be subdued on back of this weak guidance and the earnings coming in from Accenture. So on back of that, you can see LTI, Mindtree, HCL Tech, Infosys, Tech Mahindra, all of them losing in trade. And amongst the list of the IT index or IT counters, you also have Adani Enterprises that is seeing some sort of a downtick as we speak. So let's take a look at the sectoral indices then, and suffice to say that you have the pharma index that is the top gainer, 2.8% uptick coming in for pharma index, while on the flip side, the only sector that is losing in trade is the IT index, and that is down about 1%. So that's the way how the markets are looking like this Friday, all geared up for that long weekend, Shrishti.
Well, yes, but before getting into the long weekend, let's get into some of the learnings, and let's go ahead to Kunal Bothra now to learn the basics of technical analysis. A very good morning, Kunal, and onto the screen, yet again an interesting topic, the importance of 50 as well as 100 DMA. So take it away.
Well, yes, Shrishti, thank you so much for that. Good morning to you, Cheryl, and everyone. So, I'll stick to one, interesting topic over here, 50 and 100 moving average, which, one of the charts which holds a lot of prominence and discussion at current levels. Now, we always believe that every trend which starts off into the indices or into the asset class has certain set of a trend behavior for itself. Now, on the charts for Bank Nifty, which we'll see that, there's been a classic kind of a sign in the last phase of correction that was in 2022 end. Going till March 2023, and then the rally which picked up from there. Now, this brown line which you can see is the 50-day moving average for the banking index. So from here on, the banking index actually got into a bit of a reversal, kind of a mode. We saw the banking index falling quite sharply. This is the 50-day moving average, as you can see. Now, every time the bank index is going into a rally, the 50 DMA is acting as a resistance. Then comes the 100-day moving average, which acts as a major resistance. So the Bank Nifty spends a lot of time consolidating over here, but fails to cross over this level convincingly, and then gets into a breakdown mode. So 50 DMA and 100-day moving average actually become strong support as well as resistances when the index goes into a trend reversal mode. On the upside, when the 50 DMA has managed to break out and the 100 DMA has managed to be broken out, we've seen the trends reversing on the upside. So now what happens is that the 50-day moving average, which was acting as a barrier or a resistance, now starts to form a support. So this was the recent support for the month of June for the banking index, where the Bank Nifty took support at the 50-day moving average, went up higher, made a new high, 46,000 odd levels, then corrected, came back again towards the 100-day moving average. This has been managing to prove a very good support for the Bank Nifty so far. But in case if the Bank Nifty gets into a correction and this 100-day moving average doesn't hold on, then we could be looking at a sharper reversal for the bank index. What also matters is the test of this 50-day moving average. going forward, whether the bank nifty would be able to surpass this level of 45,000 or not. So this is a very important way to try and understand trends. Every trend, as I said, has a behavior. So far, the behavior for this trend is trying to protect the 100-day moving average, even after a multiple retest which has happened over the last 2 or 3 months.
All right, so that's a crucial topic, or rather extension of the topics that we've been discussing on Buy Now, Sell Now Pathshala, and this time again, importance of 50 and 100 DMA. Thank you so much for that, Kunal. But on that note, viewers, we'll slip into a break on this edition of Buy Now, Sell Now. When we come back, we'll start taking your queries, so don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now, a show where we get you answers for all of your stock-related queries. Remember, viewers, you can connect to us on the WhatsApp number that will be flashing on your screen. Do remember to mention your name, the stock that you're looking to invest in, the stock name as well. If you've already invested in the stock, then do mention the buy price, the quantity, as well as the time horizon, because when you give the time horizon, we'll know exactly which expert to take your query to. We have on the technical side today Kunal Bothra, and on the fundamentals today we have Vivek Karwa joining us on the show. Once again, good morning to you, Vivek. Thank you so much for joining us on the show. And once again, good morning to you, Kunal. And let me kickstart with all the stock queries that have already started flooding in, and this one is coming in from Mr. V. Mathur, who's a senior citizen. He's writing to us from Delhi, Vivek. He's a long-term investor, is what he's saying. He wants to know whether he should continue to hold on to Asian Paints, which he's purchased at a level of 3,126, and Dabur, which he's purchased at the levels of 543 rupees per share. Makes sense to stay put with these counters, and also in the next 2 years, what should he kind of envisage, actually keep an eye on, a target for a number for the stock price?
Okay, Shiril, good morning and good morning to everyone. See, one thing is clear, Asian Paint stock has actually not performed. In fact, I should say it the other way. It has performed better than what the company has been reporting profits of late in recent past. And in near term, there are, say, certain dark clouds ahead, because the crude is trading above 90, 93, in between that range. And there is a prediction that it can cross 100. So if that happens, your aviation, paints, tires, all those sectors are already seeing pressure, and the stock might not move for that long. So being a senior citizen, I feel you should shift from Asian Paints. Fundamentally, though it is a good company, but in short term, there can be trouble. And we are seeing last 1 year performance is nothing over here. So if you can even shift to HDFC Bank, in fact, last show also we spoke about that stock. I think that would be a better, safer strategy for a senior citizen to adopt at this point of time.
Okay, that's the take coming in on Asian Paint. Moving on, and Kunal, another stock that I have is coming in on Tech Mahindra. The query is from Suresh, and he's holding 55 shares of this particular counter at a price of 1,811 rupees. A couple of news flow on Tech Mahindra. Just yesterday, we saw that stock falling 4%. Morgan Stanley has downgraded. How do you see this particular counter? Any further correction that could be there for Tech Mahindra, or should he continue to hold on?
Oh, I think 1800, which means that was exactly the top for Tech Mahindra. I think 1830, 1838 was the top for the stock price. And I think you've been patient enough holding on to the stock, even in the first round of a major sell-off, when the stock had fallen by almost 50% towards 940, 950 mark. Now, I would probably expect that what we may see going forward is maybe a couple of days of more negative price action for in the stocks like Tech Mahindra, as well as many of these IT majors. But as I have indicated earlier over the last many days, that you should probably be looking out for these IT names as at least another 1 to 2 year kind of a time frame portfolio holdings for yourself. So I think if you have that kind of a time frame, I would suggest to hold on. In case if the stock say dips down towards 1150 mark, 1150 to 1160 zone, that could be a point where you will look to even average further, so that you can bring down your cost price.
All right. The next query that I have is coming in from one of our viewers. This one, he's not mentioned his name. Yeah, he wants to know about Bharat Wires. Kunal, do you track this by any chance? He's bought about 1,250 share at price of 238. He wants to know a target for this one.
Well, I think the short-term charts are looking quite okay on the stock. I would suggest that you can probably keep a trailing stop loss. I think maybe closer to 255 could be a trailing stop loss for Bharat Wires. Short-term charts are looking quite okay. In case if it breaks past about this double top at 278, 280 mark, then we could be looking at the stock even crossing the 300 level. So you can keep that as a target.
Okay, Vivek, the next query is coming from Raman from Chennai, and he is actually looking to invest in fresh 2 to 3 shares with a 1 to 2 year investment horizon. So, any of your top recommendations at this point in time for Raman?
I think since he's in Chennai, he should directly come to my office, Srishti. Anyway, see, what I would do at this point of time is because if you're looking at 1 to 2 years and we have election headwinds also coming up, I would look at bets which look quite safer at this point of time. So if I'll mention 3 stocks, again, my first pick would be HDFC Bank. The second would be Bharat Electronics. In defense play, I think this company has healthy order book right now. And whatever happens, what kind of composition of government comes, whichever government comes, I think BEL is one of the cheapest stock in defense space today's date. So I think you should invest in BEL, and it's again say you can call it a blue chip, though it's not a blue chip. And the third stock would be Power Grid. So Power Grid also, the power segment looks very interesting here, and again the stock looks undervalued. I think Power Grid, HDFC Bank, and BEL should be my top 3 bets for next 1 to 2 years.
All right, and the fact that you are based out of Chennai, Vivek, I think then you will have like a line of people actually standing, because most of our viewers who write to us are from Chennai actually. So let me take the next query then. And this one is coming in from Ramamurthy. He's writing to us from Bahrain. He wants to know whether it's good time to exit Alembic Pharma as well as La Opala Kunal. He's suffering small losses on both of these counters.
Yeah, I think you can look to exit these stocks. My sense is that Alembic Pharma as well as Lao Pala, both of them are actually going into a bit of a corrective mode. So Lao Pala, I think, has made a top in the month of June, July, 479, 480, and fell down to as much as I think 410 mark. It's now seeing a mild rally, but I believe both of these names could actually be something which you can look to even exit at current levels.
Okay, moving on, and the next query that is coming is also from Chennai, Vivek, and this query is from Balaji, and he has bought NTPC at a price of 218 rupees. He wants to know your take whether to hold on this particular counter or exit and book profits at this point in time.
Christine, in fact, even the previous caller should be DNA belonging to Chennai, but he is living in Bahrain because Ramamurthy is a Tamil name. Anyway, I see NTPC, in fact, on your sister channel, I've been recommending since 180 rupees, and with a target of 250, I think it's very close to that. Target has been achieved. But if you are looking at longer period, I just now spoke about power grid and the power segment for long term. I think if it is, if you can give 1.5 years or 2 years, you should hold on to NTPC. And the kind of expansion they are doing, I think this stock should be 300 pretty soon. So just hold on tightly.
Okay, this one is coming in from Sundarajan from Coimbatore, and Vivek, he wants guidance on REC. He's bought about 200 shares at a price of 290 rupees per share. So he wants to know some guidance. I'm not sure whether he wanted on technical front, but given the fact that power sector has been seeing rally, add to that list, even power financiers like REC and PFCs also have had a good ride. Where do you see REC headed from here on? Fundamentally, do you think he should stay put with this particular counter? The cycle is just started?
Again, Coimbatore is quite close to Chennai, Shril. So this has become a South show today. Anyway, I see REC at 6.5 PE. Okay. And we all know visibility of power, what is going to happen, and the kind of consumption which is going to increase in future. I think it's a no-brainer again. REC as well, you should hold. So 6.5 PE. Only concern here is that working day capital has increased, but that's fine. That doesn't matter much. I think you should hold it off.
Okay, so let's give some break to all the South Indian viewers. And Vivek, just for your note, even Cheryl is from Karnataka. So she's also one of your neighbor and my neighbor too in the show. But moving on to
Tamil Nadu and Karnataka are fighting right now. So
Okay, let's not get there, and let's come back to the stock markets then and move on to our next query then.
Yes, rightly. The next query that I have now is coming in from senior citizen Krishna. He's writing to us from Bangalore. And Kunal, I'll take this one to you then. And given the fact that he's asking about Poonawalla FinCorp and whether he should enter right now. I believe a few days ago you did have a positive call coming in on Poonawalla FinCorp, and you did say that it's a good time even now to enter the stock.
I think it's a very good time to enter into the stock. So from 440, 450 levels, the stock has already corrected more than 15%, 15 to 18% from those 450 odd marks. So it's come back towards 370, 380 mark. It also coincides with the 100-day moving average for Poonawalla FinCorp on the daily time frame. So I think it could be a very good retracement level to buy the stock. My expectation is that whenever the cycle turns around for the stock, it should probably try and scale past above the previous highs and make a new high. The concern would be in terms of time frame. I don't expect that to happen in the next 1 or 3 months, but possibly another 1 to 1.5 odd years. So maybe 12 to 18 months is where I would expect that breakout to happen for Poonawalla FinCorp. So if you have that kind of a time frame, you can look to buy at current levels.
Okay, Vivek, the next query is coming from Vincent, and he's holding 100 shares of BSC at an average price of 660 rupees, almost a doubler for him. But at this point in time, should he book profits, or there could be more leg to the rally?
Shrishti, see, the stock is running because their derivative segment has started doing well off late. And as a disclosure, I got my authorized person approval just this morning. So hereafter we can trade in BSE F&O as well. But I find that the stock has run up quite a bit in short term. So it would not be a disaster if you actually book some profits and take. Company is good, future looks good, and if derivatives picks up and if there is good competition to NSE, I think BSE stock might do very well longer term. But short term, I think profit booking would be advised. But longer term, definitely can hold on.
Okay, this next query is also coming your way actually, Vivek. This one is coming from Sagar, and he wanted your view on Ingersoll Rand. He's saying that he has a nice chunk that he's holding from 650 levels or so, and he's holding the same stock even in NYSE. He wants to say that he's saying that the stock has actually performed very well till now in both the markets, and he's also kind of tried to understand business more personally while investing in the stock. He wants to know, do you personally feel the valuations are elevated at this price, or do you see more growth in the space as earnings margins and EPS growth are still intact for the company?
See, the valuations wise, definitely it is among the highest valued company today's date after the run up. But company has been literally reducing debt. It has almost become debt free, and in fact they have been rewarding the shareholders also, and that's the reason the stock has been moving. Also, if I look at last 3 to 5 years, the stock has given a CAGR of almost 70%. And while the profits have not grown that much. So I want this activity wherein the profits and the stock price move in tandem. And if the stock price has run up beyond what the company is actually earning, I would be little uncomfortable. So this is one space, capital goods, wherein you can book profits little bit. And considering market volatility right now, I think you should book profit.
Okay, so booking profit advice coming in on Ingersoll Rand. But with this, viewers, it's time to slip into a very short break. Don't go anywhere. We'll be right back. Welcome back to Buy Now Sell Now, show where we get you answers for all your stock-related queries. And today onto the show, we have Kunal Bothra as well as Vivek Karwa with us to guide you better. We're moving on to the next query then, and this query is coming in from a long-term investor who's been sitting on phenomenal returns and definitely an example for all of us. The query is from N. Lakshmi Nagini from Hyderabad, and Kunal, he's a senior citizen and has been holding 5,000 shares of Gujarat Gas just at a price of 20 paisa, where he invested in this counter back in IPO in 1988. And another counter is Viniti Organics just as ₹1 and holding 4,800 shares for this one. So great profits at this point in time, but good time to book profits, or should he continue to hold on?
I think exceptional profits. Your cost is as good as zero for these kind of stocks. Vinity Organics, I think specifically, has been a phenomenal stock over the last couple of decades, and the stock is almost at 1800 plus mark. Has done exceptionally well. It's managed to be one of the few names which has managed to ride out every phase of the market volatility and still made a new high, as well as moved up higher for itself on a consistent basis. Gujarat Gas, on the other hand, there have been short-term niggles into the stock. The stock formed a high, I think, at 750, 780 mark some time back. It's still struggling to find its feet, but I would believe that many of these gas stocks, Gujarat Gas, IGL, MGL, they've actually come back into a very strong support zone for themselves. So I would recommend to hold on to both of these names.
All right, this one is coming to you, Vivek, from Saroja. She wants to know about Berger Paints. Can she look to enter this one for the longer term at current price, and also for a minimum 3 years? She's wondering whether she can expect a CAGR growth of 15%.
We started with Asian Paints, and if you look at last few months, Berger has outperformed Asian Paints, and both are say ditto companies into paints, and this crude prices are going to hurt these companies in short term. So at price to book of almost 14.9, I would advise her to again book profits on Berger as well, because Asian Paints, I gave a profit booking call, and definitely Asian Paint is more fundamentally valued than Berger. So, and Berger having run up more, I think there is no other option for me but to advise her to book profit and maybe enter some other sector.
Okay, moving on. The next query, Kunal, is coming on Ashok Leyland. Arvind Reddy from Hyderabad is holding 150 shares at a price of 165 rupees. That's his average price, but wants to know, can he add more at current market price? Your opinion?
Well, you can add at current market price. The stock is coming back towards the support zone, even though the stronger support for Ashok Leyland is 160 mark. I think after today's candle in the mood of the market, I'd probably expect that the base may be moved up higher from 170 to 175. So I think at current levels, it could be a good point where you can look to average further.
All right, this one is coming from Yugandhar, and he wants to know about Lincoln Pharma, Vivek. He has 39 shares at a price of 330 rupees per share. Right now, he's saying he's in the profit in this particular counter. He wants to know, should he look to exit or add some more in the fall, because he's saying that the company is targeting a revenue of 750 crore rupees by actually 2026. Right now, the revenue is around 500 crore rupees. Also, he's spoken about the valuations of the company. But as a long-term investor, keeping the growth as an earnings growth in mind, do you think it makes sense to stay put with Lincoln, add some more in the fall, or should he look to book profits right now?
Shiril, first of all, if you look at indexes today, the best performing index as of now is Pharma. And on my screen, I'm able to see that almost all Pharma stocks are up, and so is Lincoln. I feel at 14p among the Pharma pack, it looks one of the cheapest stock available to be bought. So if you are holding it, surely you should hold it on. And secondly, the market cap of the company is it is a small cap pharma company. So the movement also could be faster if some kind of re-rating happens. I think you should hold it on. Overall, things are looking good for the company. And in case of any fall, of course, today the pharma index is up, so I will not advise her to add or buy more. But yeah, you can surely hold it on.
Okay, that's a hold advice on Lincoln Pharma. But Kunal, the next query is specifically for you, coming from Raja, and wants to know about Adani Wilmar. Is this a good buy for a long term, and can he enter at current market price? If not, then any price that you can advise him with?
I think I don't sense it's a good stock as well as a good price to invest into. The stock has been just consistently making new lows. So the selling which started off for Adani group of stocks, many of the stocks have managed to recover, like Adani Ports, etc. But then there have been very few names which have actually gone down significantly and just managed to go into a consistent correction. Adani Wilmar is a stock which falls in that category. I would suggest to avoid this name.
Okay, another one coming your way from Reema. She's asking about BEL. Kunal, 170 shares at a price of around 109. Zomato, 300 shares at average price of 79. What should she do with these counters, and can she add some more of both of them, and also target price?
Yeah, I think both BEL as well as Zomato look very attractive. For Zomato, I think couple of weeks back I had mentioned a positional call at target of 120 plus. So would maintain those targets for Zomato. You can look to buy at current levels as well, maybe average. Even for BEL, I would be bullish on the stock. I think it's come back towards a minor support point 130.35 zone as a support for BEL. So you can probably keep a target of 144 if you're a short-term trader.
Okay, the next query is also for you, Kunal. This one is from Veena, and she wants your advice on Naveen Fluorine because she is holding 17 shares from a price of 4,675 rupees. The stock is down in trade today after the resignation of the MD, and the company has been dealing with a change in the top management issue. So, what's your advice? Do you believe that the stock will be able to recover, or any sort of advice to average out this particular counter?
See, I would not suggest to average out. In fact, after such kind of cap downs, we've typically seen that stock gets into a downtrend which lasts for at least another couple of weeks or more than that in terms of time frame. So I think you should probably look to stay away in case if you're looking to buy the stock. I believe that it makes sense to go back to the traditional larger cap stocks in this kind of a scenario, and maybe revisit Naveen Fluorine say in the next few weeks once the selling abates and once the stock maybe settles say another 5% to 10% lower from current levels.
Right. Let me take this one to you, Vivek, because we have Manohar from Manohar who's written to us on Delta Corp. He has 100 shares of Delta Corp at a price of 175 rupees per share. No doubt he's asked for technical supports, and I remember Kunal repeatedly last week did mention the fact it doesn't make sense to basically be in a stock where you have it's mired with news. But on fundamentals, he wants to know, does it really make sense to stay put with Delta Corp with so much news happening week after week and all of a sudden?
Say, Shiril, buying Delta Corp is like nearby Chennai, in Tamil Nadu, we have two hill stations called Kodaikanal and Ooty, and they have something called suicide points. It's like going there and jumping ourselves. Come on, why would you buy a company wherein there are so many dark clouds now, and what is going to happen? See, more than the market cap of the company, you have liabilities which have come up, and even to appeal, they have to deposit 25% of the demand and then go and appeal. So you would not purposely put your hard-earned money somewhere where there is no clarity, and you don't know what is going to happen next. Better stay away. मतलब बोलते हैं ना खाई में जाके गिरना नहीं in Hindi. So that is the thing over here. I think you should totally sell it out and come out.
Okay. So that's the sell advice coming in on Delta Corp. But moving on, and Vivek, what's your advice coming in on Campus Activewear? The question is from Mohit from Ludhiana, holding 200 shares of this particular counter from a price of 289 rupees. His time horizon is for the next 2 years. Do you believe this will give good returns to him?
The short term, the company has corrected a lot, in fact, and I feel at these prices you should hold it on. The one more thing, their product, I find that their product is almost equivalent to your Nike or Adidas, and if something if this product picks up, I think this stock should really do well. So compared to in the footwear industry, which is again getting more and more formalized going forward, at these prices, this is a good hold. You should hold it on. Your buy price is really very, very attractive. It has corrected almost 50% from the top, so the downside is minimal. I don't know how fast will it run. Will it run in short term? I'm not. I'll not be able to comment on that. But definitely the downside is limited. Hold it on.
All right, this one is coming in from Ankur Saxena, and he wants to know about Adani Wilmar, wants a long-term perspective on this counter. So Vivek definitely is coming to you only. 100 shares at an average price of 390 rupees per share. What should he do?
At this prices, I think Adani Wilmar, again, the downside is limited over here. I find that the palm prices have corrected, and this is going to support this company and Patanjali Foods both. So going forward, and again, there is slowly confidence coming back into Adani group as well. So I think this should be a good hold in among the there is all Adani packs. I find Adani Ports and Adani Wilmar to be a good hold at this point of time. So I think as a disclosure, I do hold some quantity of this.
Okay, that's the take on Adani Wilmar. Kunal, the next query is from Poonam, and she wants to know, is this the right time to enter ITC?
Well, yeah, it could be a good time to enter ITC, provided you have a longer term time frame, as well as looking out to build quality stocks in your portfolio. my sense is that this 440 odd mark could actually be a good support zone for ITC. So, I think earlier also I had mentioned that closer to 450 levels plus minus 20 odd rupee for ITC could be a trading range, which could probably go on for maybe another few weeks or few months for the stock price. So I think at current levels, the risk reward is in favor if you're a long-term investor.
Okay, Kunal, another one coming in for you. Alma D'Souza is asking about Pilani Investments. I'm unsure if you tracked this one. Do you track this one by any chance? She's holding the stock, has 15% gains. Now she wants a target price for the next 6 months.
No, not really. And again, it's very liquid. I think the average trading volume sometimes is just 2,000, 3,000.
So does it make sense for her to actually book profits given the fact she's already making a 15% gain in such a counter?
Yeah, I would advise so. I think it makes sense to book profits over here because of the way the stock, because the illiquid nature of the stock is, as well as the recent price trends also, as I was just looking at the charts, doesn't make sense to hold on to it from long-term play.
Okay, that's the advice on Pilani Investments. But Vivek, do you track CAMS? The query is from Ashish from Gurgaon, and he has bought 175 shares from a price of 2,430 rupees. Wants to hold this one for the next 12 months and also wants to know good time to add on more to this particular name.
See, this is a company which does RTA services to mutual funds, PMSs. And there are only two companies in this space. One is K-Fintech and CAMS. So I find as the industry grows, and in fact, if you look at AMC business, there are more and more AMCs coming up and setting shop. In fact, Grow, your Helios, all this are Bajaj Finserv, all this are always got the permissions for mutual fund AMC businesses. So these two companies, I find longer term, they would continue doing well. You should surely hold on. Short term, yes, with the markets, they have run up, and hence they might not show you great rally, but definitely a hold for long term.
All right. This next query that I have is actually coming in from, let me check this one. This one is coming, Kunal, your view. I think he's Adit. No, he's not Adit. I think this is Minakshi from Hyderabad, who's asking about DV's Lab, 3,700 call option. The buy price is 124. What's your view on this one?
So I'm assuming it's the October series, and you've bought it maybe just about today or in the last couple of days. I'm not sure the current market price for the stock, but I would for the option. But I would believe to hold on to the option at current levels. Most of the pharma stocks are getting into a breakout mode. Like I think today we've seen Sun Pharma breaking out, Cipla managing to come back, Gland Pharma, Ipca Labs, many of these large caps, mid cap stocks making a comeback. Even I think Dr. Reddy is up some 0.5% to 1% the last I had seen. So I would probably believe that even DV Slab can get into a breakout mode. So I think purely in that anticipation, you can hold on.
Okay, you can hold on to the pharma names then. But Vivek, the next query is on two small cap companies. I'm not sure whether you track this one or not, but the query is from Pradeep, and he's holding 100 shares of Hintcon Chemicals, bought at a price of 61 rupees, sitting at good gains in this particular name. And he also has Piccadilly Agro Industries, 100 shares at a price of 40 rupees. He wants to continue these names for the next 2 to 3 years. So will you be able to advise him on these?
Yeah, unheard of names for me also. So better not to comment, because overall on the numbers front, Hintcon Chemicals looks good, debt-free company, but actual what business they're doing, I'm not aware. So what sort of chemicals, even that I'm not aware. So I'll have to skip both these stocks.
All right. On that note, actually, we'll slip into a break on this edition of Buy Now, Sell Now. When we come back, we'll continue taking your queries, viewers, so don't go anywhere. Right, welcome back. You're watching Buy Now, Sell Now on ET Now. Let me take a query that we've got from our Twitter viewer. And this one is from Sunny. He has Marico, 100 shares at a price of 750 rupees per share. Kunal is gone down to around 558 or so. He wants a short-term view. What should he do with this one, this counter? Should he look to stay put with Marico or look to exit, because he is, it's below his buy price?
I would suggest an exit on the stock. Now, I sense that after yesterday's sell-off or the correction which had happened for the stock, and today's minor bit of recovery or a bounce, 0.5% or so for the stock price, I don't expect the stock to get into a major recovery going forward. So I think it's a good time where you can look to exit.
Okay, good time to exit Marico. But with this, viewers, let's kickstart taking all your stock-related queries in the rapid-fire session. And the first question to you, Kunal, coming from Saji and holding Apple India shares 50 quantity at a price of 1180 rupees. What to do with this one?
Definitely a hold, and in fact, you can even look to add at current levels.
Okay, this one is from Prasad. HDFC Bank 200 shares at a price of 1,545. Should he add some more, about 300 more shares in his portfolio right now? What's your take, Vivek?
It's a buy.
I'm sorry, we missed your answer there. I think the audio was a bit down. Did you say it's a buy?
No, I said, in fact, I already gave a buy on the stock, so it's a buy. It's a strong buy.
Okay, Vivek, the next query is from Even Matthew from Dubai, holding 1,000 shares of Wockhardt Pharma from a price of 650 rupees. What to do with this one? Continue to hold on or exit?
Hold it on. Looks good.
Kunal, SJVN, Dr. G. Sudhakar has bought at a price of 182, 1,500 shares, short-term prospects.
Would suggest to book profits closer to 80.
Okay, Kunal, Yuvraj wants to know, can he enter REC and PFC for the next few months after the recent run-up in the rally? Good time to enter?
Wait out for dips. Buy on dips could be a better strategy.
Samba Shiva Rao wants to know, in the hospitality space, which of the three stocks, or which are out of the three stocks, which two should he invest in? Indian Hotels, EIH or Lemon Tree? What's your take, Vivek?
Lemon Tree and Indian Hotels.
Okay, Kunal, what's your view on Jubilant Pharmova? Viewer named Shiva has bought 1,000 shares at a price of 330 rupees.
I would suggest to hold on to the stock.
All right, this one is from Suhail, wants to know whether he can buy Ujjivan Small Finance Bank right now. Ujjivan right now. He's already holding Ujjivan Small Finance Bank. Or should he switch to Ujjivan for the merger benefit? Kunal.
I would suggest to hold on to Ujjivan itself.
Okay, Vivek, Andy is holding 2,500 shares of Biocon from a price of 270 rupees. No significant movement from the last 2 years. Continue to hold on or book losses?
I think it's a crying buy right now at these prices. Pharma is set to rebound, so you should hold it for longer term.
All right, and with that, we come to the end of the rapid fire as well as the queries. Thank you so much, Kunal, as well as Vivek, for joining us on the show, helping our viewers resolve all of their stock-related queries. And viewers, with that, we come to the end of this week's edition of Buy Now, Sell Now as well. So it's a goodbye from Shrishti, myself, our producer Abhishek, and our director Santosh. But as we leave, today is World Hearts Day. So listen out to what exactly Dr. Devi Prasad Shetty, world-renowned cardiologist, has to say about how to keep your heart healthy.
First message to everyone is that do not wait for your heart to break down. See the doctors before it breaks down. What we call as a preventive maintenance. Wear a smartwatch and try to walk at least 8 to 10,000 steps per day. There are now a lot of research articles publishing that 10,000 steps per day has a magical impact on your health. Sitting is the next cigarette. So it is very important for you to, I know your job today means you have to sit on the chair most of the time, but every 20 minutes, get up, try to do some work standing, then you sit. Every half an hour, get up out of the chair, walk for 2-3 minutes, then come back and sit. I recommend everyone to practice yoga. I know everybody wants to build big muscles. Even I was like that. I loved bodybuilding. I used to participate in all these contests, but nothing like yoga. Yoga has a magical impact on your life. Believe me, at least for 10-15 minutes every day, practice yoga. And then please quit smoking. Check your weight. Have a weighing machine at home, which gives you the weight in pounds, not kilos. When it is in pounds, when it goes down, you quickly see something is happening. And today, the villain is not the oil. Villain is the carbohydrate, rice and chapati. These two things are not very good for you in large quantity. Try to restrict the carbohydrate. And my last advice to all of you, become spiritual. I'm not saying you should become religious, become spiritual. Because knowing that somebody up there, protecting us, making sure that everything is done the way it should be, is a very, very, very positive force in your life. Good luck. Thank you so much.